Hello, everyone. This is Rafi. I'm here with Michael Goldstein, aka Bitstein. How are you doing, Michael?
I'm doing great. Thank you so much for having me.
It's my pleasure, man. The first time we met and the last time we saw each other was at the Boulder Carnivore Conference set up by my friend Amber O'Hearn. Is that right?
Yes, yeah, it was an incredible event, and I was so sad that it hasn't happened since. I hope you know we'll be able to do that again.
Yeah, the event was one of the many victims of COVID and the lockdowns. I was looking forward to the second iteration of that.
Yeah, it was such a successful event too. It was just yeah, I don't actually go to a lot of events, but I had to go out for that one, and it was certainly not a disappointment. So hats off to Amber.
Yeah. Do you remember the barbecue ribs that they served?
Oh, it was incredible. And the people
Yeah.
upstairs, you had the raw carnivores upstairs also feasting, and they had some pretty good meat.
Oh,
So there's
really? I
just
didn't
good
know
food
there were
all around.
the raw carnivores upstairs. I missed that.
Yeah, I guess you had to be in the know. But
Shit.
yeah, people brought in meat from, a lot of people drove in, and they brought meat with them. And it was fantastic. It was good enough that it was like, yeah, I understand why you want to eat this one raw. It's
Wow.
so tasty on its own.
Does tartar count as raw if you have like some lemon and like pepper and salt on that? Does that count as raw or is that too
I mean, I
fruity?
assume so. I don't. I'm not a member of their purity police, so I don't know. But it
Yeah,
sounds
that's
raw to
a
me.
yeah. It sounds raw to me, and it tastes definitely tastes raw to me. And I just had some for lunch. I had a salmon tartare and some like French super fatty salami, sort of like picnic food.
I
I
guess
think of it.
you see, you live somewhere where they'd know how to serve that.
Oh yeah, it's good stuff. It's
It's,
good
yeah,
stuff.
there's nowhere here that you can like show up and ask for culinary dishes like that and expect to get anything near what you wanted.
Yeah, so I made one of the best investments in my life, except for Bitcoin, obviously, and it was a meat grinder. It was I don't know, not even $100. Just plug it into the wall and just buy cuts of meat that you can then grind down fresh for a patty or something.
Oh,
And
perfect.
it's honestly one of the best investments I've ever made. Like with the a slow cooker, which is something every poor person or student or person who doesn't like to cook should buy. Like high quality meat and food for super low prices with very little time spent preparing it. So I like those two options for especially for carnivores, but for anyone really.
Right. Okay. So having ground a lot of meat now,
Mhm.
when you're just eating steaks, obviously, like there's nothing that compares to like a ribeye or maybe a porterhouse or whatever.
Yeah.
Have you found grinding the meat? Are there cuts that might be a little more surprising to be tasty? Like it turns out that like eating a bunch of round, eye round or something ground up is actually super good.
Yeah, that's a good question actually, and I didn't really know the answer until I started testing it out because I bought the machine. Because when you go to the butcher's, you're not really gonna try some crazy shit. He usually is gonna look at you
Yeah.
like, "What are you doing? Stop wasting my time." So I usually hamburger meat is like 10% to 20% fat, usually maximum. So of course I can experiment with like fattier cuts, which are like 30, 40% fat. If you go
Hmm.
super high fat, the burger patties don't stick together properly anymore. So you have to choose if you were to like use a ribeye, it might be too fatty, right, for your
Yeah. Oh,
hamburger,
it's gonna get so
right?
messy too.
Yeah, it's gonna get super messy. It's not gonna stick together. So you want something. Okay, what's it called in English? In French, it's a basse côte, which is like the lower part of the rib. So it's got some fat, but it's not like a crazy amount of fat, and that's like perfect. It's probably around like 30, 35% fat, and it makes for like great burger patties. And then you just have to
Awesome.
be careful with like if you use, for example, cheek is really great slow cooked meat, but if you use it in the burger patties, it's going to have like, you know, the what's it called, like the filamentous intramuscular stuff
Yeah,
that
like all the
can,
sinew and
yeah, that's not great because you'll just have pieces of that in your in your burger patty. So you can do it in a pinch, but it's not
then in your
recommend.
teeth.
Yeah, and then you're going to spend an hour digging it out. So that's yeah, not the best idea. But yeah, so everyone invest in meat grinders, slow cookers, and buy meat from your local farmer if you can. That would be my like nutrition investment advice, and then we can talk about your financial investment advice if you haven't.
Yeah, no, I mean that sounds. I mean, if you the reason that people are into Bitcoin in the first place is they're trying to save money and think about their future, and you know nothing's more important for your future than your health, because if you're not healthy, then you're not even going to be alive for your future to enjoy.
So do you think that's where the big philosophical overlap is between carnivore and the Bitcoin community?
Uh, I would say that a mix of that, like being able to just kind of view long term sustaining your own bodily capital and people, you know, finding that it actually works. I also think that in order to have been into Bitcoin or carnivory and vice versa, you have to have a certain skepticism of the expert class, which is not to say that there doesn't exist, you know, experts that know what they're talking about, but you know, we have to be a little more rigorous and scientific in our examination of those experts. And when we do that, we find out that most of the experts are completely off base when it comes to financial matters and money matters. And likewise, nutritional science has just been, you know, a bit of a shit show for the past, you know, God, 50 or more years. Ansel Keys was what, in the 50s? So I guess it's more like 70 years. So it's been really bad. And so if you were able to work through a sort of heterodox opinion on one topic, to the point where you feel comfortable being heterodox on that, and being confident that you actually are onto something that other people just missed, then you're also going to be comfortable and probably you know, desiring to go apply that process to other fields of life to see what else you can benefit. And I think, you know, those two things work very well together, and it's why yeah, I think Bitcoiners they've tended towards, like, you know, carnivore or keto or paleo. And you know, I'd also give credit to the, you know, vegetarian and vegan Bitcoiners, even if I don't, you know, personally want to. I don't agree, and I don't want to be eating their diet. I would guess that it was a very similar mindset that went into their decision making, and I have to commend that ability to you know, question everything, because, you know, as Feynman said, science is the belief in the ignorance of experts, and we should always be kind of, you know, trying to be critical of the ideas we hold.
Yeah, and do you think the Bitcoin community does that as a whole overall? Do you think it's something that distinguishes it? Because it's surprising how it's come to form around this technology, this financial technology. So I don't know how you would compare it to other communities, but the fact that the thing is still alive and ongoing and has been minimally modified, as far as I understand it. I don't know if that's correct, but it's been maintained.
Generally speaking, yeah.
Yeah. So that's kind of incredible. It's in a sense, it reminds me of Wikipedia, where people are like, no, it can never work. And then people are like, oh, it actually can work. Although what's happening to it now is is maybe not all that great.
Right.
But yeah.
So I think, yeah. So I've been online for a long time now, and I've seen a lot of communities, and the Bitcoin community really is one of the best communities I've ever kind of, you know, been a part of. And, you know, there's not really a community; it's just, you know, a bunch of people who are interested in Bitcoin. There's no, there's not like, you know, I don't know. It's a very anarchic community, which is
Mhm.
apropos of the technology itself. But kind of the general trends in it are very exciting. My favorite part that's separate from a lot of that is just it's a positive group. Everyone today is so negative about literally everything, and to have a group that's actually kind of has this fervent joy and positive vision of the future, is it's intoxicating and it's compelling, and it really keeps the spirits up. And the best part, and I think what ties also into this, and into that sort of contrarian nature, and I say contrarian in a positive way here, is putting results over anything else. And I think that plays into nutrition as well, because now Bitcoin has existed for about 12 years, and since at least 2011 there's just been an onslaught of pundits and economists and all these people who think their opinions matter, saying why Bitcoin can't work, saying what's wrong with it, how it's going to go to zero. There's a whole vast amount of criticisms they'll hurl at it that I'm not going to go and repeat all of them here, but
Mhm.
like we've just heard it over and over for the past decade, and yet I'm looking over and Bitcoin's above $56,000. So, the fact that they've been saying that and yet number go up, as Bitcoiners say, is just, it's really fascinating, because, the Bitcoiners are the ones who just, they look at it and it's like, yeah, but number goes up. Like when you really look, when you look at the price and you see the actual patterns and way the sort of hype cycles actually function, it has this long trend upwards. So I'm going to stick with that, and I don't need you. I don't need you and your quote expertise to try to tell me that I don't see exactly what I'm seeing. And
Mhm.
similarly in nutrition, you have a lot of people who, if you go carnivore, you're going to get scurvy. Not having fiber is going to lead to, this, that, and the other, whether it's like the sort of digestive stuff or the heart problems, or, just, with the heart problems, saturated fat is going to cause, heart disease and everything. And then you have people who actually, they read about something and they give it a try and they see the exact opposite. And yet that class of people tends to just continue to say, oh, well, it's still going to, all of those problems are still going to exist. And the carnivore community consists of the type of people who just sees with and feels with their own eyes and their own bodies that no, actually they feel way better and healthier. So we're just going to keep doing it. And I think that results-based attitude goes a long way. And I tend to think of it as more scientific, because the role of science is to explain why the world works as it does, not to dictate how the world is supposed to work. And so you do have to see that, oh, these things are actually happening. I need to explain that, rather than if someone doesn't get scurvy, I need to explain why that happened, instead of telling them that they're going to get scurvy, because empirically that's not the case.
Yeah, you understand how the burden of proof shifts.
Yes. And
Yeah,
so I
that's
think Bitcoiners have shed that burden of proof, and likewise, people in various nutrition circles that have stepped out of, I guess, the sort of let's say saturated fat, the lipid hypothesis, or a one of the fiber hypotheses or whatever. They have also realized, like, yeah, let's shift the burden over here, because we're just describing what's actually happening, even if we don't necessarily at this time have the best explanation for why.
mhm. Yeah, that's super interesting. To be able to maintain a functioning financial system in a it's not centrally organized, but it's organized around, some principle and some principles of mathematics, of course, some loosely shared values, I would say. There's something there. It's hard to put your finger on it, but there's something there. And like you said, maybe this outlook to the future that sort of sculpts whatever this positive outlook that tends to come with the community is. And that's really interesting, because it's very different from the typical finance bro vibe that you can get from a lot of people who seem to be living on a roller coaster more than have this long-term view about some different way to conceptualize money that really is Bitcoin, that at least Bitcoin is symbolizing best at the moment.
Right. And the irony there is, if we really wanted to generalize a lot of these, so-called, finance bros or whatever, everyone is chasing after number go up. Ultimately, every stock thing is like, oh man, Tesla went up by this, or, GameStop, or you name the stock. And the whole point is it went up. And so I made some money. And everyone's just, I would argue, just trying to beat inflation, and then, try to get well ahead, enough ahead of inflation to stay afloat for a longer period of time. But it's all that. But the point here is, like, everyone is chasing number go up. So the irony is, the people who have been, from the finance world, who have, been talking smack against Bitcoin is just doing what they wish it could have been. They could have gotten, and they're almost like oblivious to its own success sometimes. Like, I think there's a lot of them who have not really internalized just how much Bitcoin has gone up, because it does normalize over time. It's actually quite fascinating how fast, everyone kind of thinks of it as normal to have a $50,000 Bitcoin. But right. Yeah, so the irony though is just like, everyone is going after number go up. It's just the Bitcoiners kind of found this number go up, and they have the fundamentals to describe why number goes up beyond just like speculative bubble. And some people just, they don't know how to think beyond that. So, and I think a lot of people are missing a good education in monetary economics and like what money is. So it kind of hinders them from thinking about this as a longer term play with fundamentals.
Yeah, because people don't think about it as deeply as you do. I mean, I've listened to you on multiple podcasts, and you're really like a historian of like monetary theory. You go into the different characters around it and the different philosophies and what it means and how it fits into Bitcoin. So I think it's important for people to understand that although number go up, there's something deeper behind it, and it's maybe most people will be convinced by just the price tag on the Bitcoin, which is, like you say, totally fair, because there are normal incentives for that. But what is the other side of Bitcoin? What does it represent for the average person who's never really going to have enough means to, check the price of whatever they've invested in and see how it does? And, that's not the life most people lead. They really have, it's a very alien notion to them. So what is the store of currency?
As it should be.
Right. Yeah. I mean, there's certainly an argument for that. So as a store of currency, what does it mean for the average person who can barely log into Gmail, technology wise, who doesn't have much more than that? What should it mean to them?
Right. So there was a lot to unpack from what you were saying before that, but basically, like, we have to think back to, what money is in the first place. And, I guess stepping back, the thing that I was thinking about as you were talking was, all these people were chasing number go up. But what I want to understand is, like, why does number go up? So why is it that Bitcoin has gone from $0 in 2009 and early 2010 to now $56,000? And why has it done it in a rather, I don't want to say predictable, but almost predictable rate? It's been a very steady exponential growth. that's extremely interesting, and people should be, trying to explain it, and certainly not just, oh, it's a bubble, because well, we've seen many bubbles. So there's something bigger going on here, and I think it comes back to what is money, and Bitcoin is just it's the best monetary technology we have, and we can kind of get into why. But basically, the reason we have money at all is because we deal with an economy with future uncertainty. So if you actually if you knew everything that was going to happen in the future, you wouldn't really need money, because you just know what to have at any given moment with, your whatever, amount of means you have, whatever capital you have. You can just know it's like, oh, next Tuesday, an accident's going to happen. So I'm going to need, X, Y, and Z resources to deal with that accident. But and I guess it wouldn't be an accident. But because we do live in a world of future uncertainty, we have to think about these things, and we have to be ready for such events, both good and bad. It could be that, like, you're walking down the street and you look in the window of a store and you see something you didn't even know was available. Maybe like a cool piece of clothing or whatever. And it's like, that just hit you out of nowhere. It's like, I need that. Well, you go in and you have the thing that they're willing to accept. So, there's at a fundamental level, there's the problem of the double coincidence of wants. So that just means, like, if I had eggs and you had t-shirts, and I wanted a t-shirt, but you didn't want eggs, you wanted, ribeyes. If I wanted to get t-shirts from you, I'd have to go, find someone who's willing to trade eggs for ribeyes, and then give you ribeyes for the t-shirts. Or you might say, okay, I'll take the eggs, but then you run into this problem of, well, now I have eggs and I need to go figure out how to turn it into, ribeyes. And you were just kind of willing to take on that cost because you wanted to hold on to the eggs for whatever reason. So there's this double coincidence of wants problem, and money is just it's the way you solve that. People converge on a medium of exchange that they can use for indirect exchange. So if I know ahead of time that you want ribeyes, well, then I can be like, okay, well, I buy t-shirts, this often, so I need to make sure I have a stock of ribeyes so I can go get t-shirts from Rafi. And over time, there just tends to be goods that are better among a larger group of people to act as that medium of exchange. And there's certain properties about that medium of exchange that make it better than others. So, like eggs are not exactly a good medium of exchange because they go rotten. And, people are probably not going to want to accept rotten eggs. And so, they're not durable and they don't last for a long period of time. So that kind of stinks. It's like, well, I think I might want to be ready to buy something, a year from now. And it's like those eggs aren't going to last you. So that doesn't really work. And then there's a bunch of other property. That's just one example, but we have, the kind of things that, basic economics talks about with, divisibility, storage costs. There's all these different costs. And one good is going to emerge out of this whole, array of costs to just reveal itself as the best medium of exchange. Historically, this was gold. Gold, hits all the marks on all the things we talk about, but it still has a lot of costs with storage. It's very heavy, and it tended to be centrally controlled because because of these storage and transportation costs. And then they, hand us IOUs that we can go around and, Federal Reserve notes used to, be worth a particular amount of gold, and you take that and you trade it. But now that it's centrally controlled, it's like, we don't know what's going on behind the scenes at those banks. And what happens is they start to issue more notes than like the actual gold that they have, and you're trading it, and this just runs into a number of problems. It could lead to catastrophic bank crises, but could also just have the problem of, if you're issuing more notes, if you're producing more of the medium of exchange, I think to get back to, kind of the key things, scarcity is probably one of the most important properties that we can talk about there. And we can think of scarcity in terms of what's called stock to flow. So stock to flow is how much of a good exists, and then how much of a good, gets produced over the course of a year. And gold kind of tends around, say, 2%. So every year, about 2% more gold than exists is produced. And so, if the economy were to grow by 5%, then just holding on to gold, you'd be accumulating wealth just by holding on to gold. And so gold has remained very scarce. But now that we entered this world of fiat where they can just print as much as they want, and it's no longer even tied to any kind of commodity backing, it's just purely faith in the government, the stock to flow is effectively infinite. And in fact, in the past year, we've seen something like 40% of all dollars in existence were printed in the last year. So it's not exactly scarce. What that means for the average person is that, well, just like, durability is important for thinking about long-term savings. If you have a good that starts off as, you have $1 and it's $1 trillion market, and then like I get that for whatever work I did, and I put it under my mattress, and then 10 years later you come out and they decided to print $5 trillion or whatever, so it's a 6 trillion. You now only have 1/6 trillionth of the economy in terms of dollars. You have 1/6 trillionth of all of the dollars. So, like, obviously, with supply and demand, the value of that individual note is going to plummet, because it's not like real goods increased by that much as well. And so people are put in this position where the money they earn just gets diluted away constantly. And that's completely unfair to the average person, because, one of the benefits, going back to those fundamentals, one of the benefits of having a good medium of exchange and a money is that it encourages the division of labor, because you don't have to, you're just selling t-shirts. You don't have to know how to make eggs or ribeyes or anything like that. You can focus on what you do best, which is making t-shirts. But in a barter economy, suddenly it's like, okay, well, now I also have to know about, chicken farming and cow ranching, and I can't just focus on t-shirts. And so it diminishes the value of the division of labor. And in a modern economy, what that means is, a person has their job. Maybe they, maybe they're a plumber, and, they've worked hard to know everything about plumbing, and that's what they do best. They have, it's a decent paying and, very dignified role helping people. But now when they get home and they put the money away, and if they don't do anything with it, the value of that money is just going to plummet over time. And so that plumber can no longer just be a plumber. Suddenly they have to think of themselves as a stock investor and a real estate mogul and all of these other things to try to offset the completely unnecessary money printing that was occurring. So that person can no longer be the best plumber they can be. They have to be all this other stuff that they, if they wanted to be a, investor, they would have, done that already. There's nothing wrong with that. And there's nothing wrong with taking up these things as a hobby. But the unfortunate thing is that people have to take it up, as a necessity rather than a hobby. They have to think about these issues far more than they would otherwise in a sounder economy. So because Bitcoin there's only 21 million Bitcoins, and there will never be any more. Anyone who acquires any amount of Bitcoins knows that in the future they will still have that amount of Bitcoin. So, if the economy grows, it means the value of their savings grows, and they don't have to worry about that dilution. so they can have less uncertainty about the future, because they don't have to worry about like, I'm going to wake up one day, I'm not going to have enough money. It's like they know they have enough money. That part of their life is taken care of. As long as, you know, the Bitcoins are kept in a safe spot, they can know my financial future is more certain than it was yesterday, because I accumulated a little more and I put it into savings. And I think this is the key thing. That was an extremely long way of just saying the key thing is, for the average person, you can just put away money and know that it's there for you in the future, and it's not going to be diluted away. You can have actual savings.
That's a great explanation, and I'm gonna clip that and send it to family members and other people who I talked to about this, because that was my that was basically what interested me in the idea in the first place, was that this was a way of not putting all your eggs in one basket, and in a very unstable basket at that. If we look at what's happened to currencies around the world, what's happening, I think, to Turkey, even in the last few days, you know, your money can be diluted away. And like you said, you have to become some sort of money manager, or you have to take, and you have to take this up as a hobby, and you have to think about it, and it's difficult. And it's kind of like nutrition, where no one can afford to be totally ignorant about what food is healthy. It's kind of the same with money in this sense. And this is becoming all the more apparent now. And it's kind of interesting to see what moves a person when. I think, like we were saying before we started recording, that coronavirus has been a wake-up call for many, and that includes myself. So I've been always convinced about the basic idea of having an alternative to fiat money, and the fact that it's digital seems sort of an inevitability. Yet now, with coronavirus and the likely inflation that's going to come, and thus the dilution of of your capital, basically, if you have any saved up, if you're lucky to have any saved up, that's going to be threatened. So understanding what Bitcoin could do for you in that sense, I think, is really important. And so I have two questions in my mind from what you just said. First is, what's going to happen when all the Bitcoins are mined? And secondly, what about non-Bitcoin cryptocurrencies, and how do you see those fitting into the picture? So you can take any which one first, I guess.
Yeah. So I mean, so mining is a process of validating new transactions onto the blockchain, and there is a reward schedule so that people who do the timestamping, sort of the processing of the transactions, that everyone who runs a node then checks. Those people receive a reward for having put in the work to do that. Mining is a slightly complex thing, and I don't want to launch into another 5-hour rant on that, but the simple of it. So they get a reward for each block that they mine, as a way to incentivize them. But this halves every 4 years. So originally you would get 50 Bitcoins for each block you mined. Then in 2012, it became 25. And then in 2016, it became 12.5. And today, after last year, it's 6.25 Bitcoins. And this just maps out to a curve. It actually, the total amount is slightly less than 21 million. There is like an exact number if you add it all up. But the point is it has this definite curve. And at the end, it goes to zero. It doesn't become zero until 2140. But by 2040, about 98 or 99% of all Bitcoins will have been mined. So there's a very long tail at the end. What happens then is miners also receive an incentive, and part of the reward is in fees. So when you send a Bitcoin transaction, you can include a fee so that some Bitcoins go to the miners as an incentive to, like, hey, mine my transaction next. And the value of these fees have also been going up, and the over time, the fees will become the dominant incentive mechanism. So at that point, what it just means is that no one will be receiving new Bitcoins. Instead, we'll just have all the Bitcoins we need. And people will just, trade there, and the network will continue because of the fees. But otherwise, it's not like we don't need more Bitcoins. The economy can run on any amount of Bitcoins. We're just following this process because it's what everyone agreed on from the get-go. One thing to note with the issuance process is, in a way, it's like unfair, and like Bitcoin is the fairest because anyone can fire up a mining machine. It's much more difficult now, but if you have the capital and a good energy source, anyone can flip on machines and start engaging in this process and try to acquire new Bitcoins. But in the fiat world, it's not so easy. Like there is a particular group that monopolizes money printing, and they get to decide how much is going to be printed. It's not set to a schedule like Bitcoin is. And they decide where that money goes. So when Congress, they just, it's like a $1.9 trillion that they just passed. And, each American only got $1,400 out of it. So that's nowhere near the entirety of the amount. So the money isn't going to Americans. It's going to, whoever's friends with politicians in order to get the funding directed at them. So this is talked a lot about in Bitcoin. There's a known economic phenomenon called the Cantillon effect. And the Cantillon effect points out that, money is what we'd call non-neutral, which is when you increase the money supply, it doesn't just go to everyone. So theoretically, I mean, now like they could just send us all the money that they just printed, but they don't. And instead it's going somewhere. And as I was saying, it goes to the friends of the money printer first. And what happens is those people, they get to spend the money. They get to go buy, Bitcoins or hard assets or, whatever they want. And it's not, the rest of us are forced to deal with the increased prices that occur as the economy gets used to the fact that there's more money. So like all that new money has to get priced in. You don't get to enjoy the fun of the new money until everything has been priced in, and now everything's more expensive. And I think pretty much any American, I don't know what it's like in Europe, but I think any American who's been grocery shopping over the past year has seen tremendous price increases, and I do think that that's heavily related. So that's just an important point to throw in there. Tied to what we were talking about before. But yeah, so anyway, to answer your question, when they're all mined, then they're all mined, and we don't have to worry about anyone engaging in behavior that benefits them over others via the Cantillon effect.
Okay, and so one reason I'm asking is because there is this perpetual growth paradigm that's sort of infused into, I would say, a lot of the maybe in capitalism in the US since the 70s, the 80s, this perpetual growth and this, GDP always has to grow, and, currency has to always, remain very stable. And I'm wondering, so you're not worried about what's going to happen when all the Bitcoin are mined. Now, the people who are worried about what's going to happen, like who are they? Do they have any valid arguments, and does the paradigm I'm referring to have anything to do with it, or not particularly?
Well, they disagree with me, so clearly they don't have valid arguments for that. No, basically it's a very fiat mindset. It's a very broadly Keynesian mindset. The thing with the perpetual growth, like I like the idea of perpetual growth. I always want humanity to be doing better and better. The key flaw isn't in wanting the economy to get better. It's the fact that they rely on this growth by particular metrics that might not be the metrics that anyone else would want to be measuring it on. So like GDP is a rather made up metric. it describes, how much trade in the economy was going on, but it doesn't capture a lot of what happens in the economy. And it's skewed by, numbers like government spending. When the government spends money, that's included in GDP. But, from a libertarian perspective, every time the government is spending money, that's actually kind of a net harm to the economy, because that's money that was redistributed from, one line of production into whatever the government says, whether or not that actually matched. And by definition, it wouldn't match what people wanted, because if people wanted it, the government wouldn't need to step in and redirect that money. So GDP is a misleading metric as far as like how to measure the health of an economy. And so I flat out reject it. And so I think there's like this problem where it's like, if your metric of the health of the economy is based not on like the actual, people's quality of life, which is, it's a more qualitative thing, but instead it's based on these numbers that don't capture a lot of human activity, and it's also skewed, then it's not going to give an accurate picture of what growth is. And if you keep wanting that number to go up, it's also easy to just like, okay, just pump more government spending so we can get that number up. And then you're not taking in all of the costs of all of the other, to the rest of the economy. So there's a great old, kind of introduction to economics called Economics in One Lesson by Henry Hazlitt. And his one lesson is a rehash of a lesson from a French economist from the 1800s named Frederick Bastiat, who talked about that which is seen and that which is not seen. And I highly recommend it as an intro to economics. But basically, the lesson is, as an economist, you have to think about, not only how an economic policy affects one group, but how it affects all groups. And when you hyper focus on GDP, you see the spending number, but you're not seeing it at the cost of like, what would have life been had you not redistributed that money? People would have been able to spend money on what they would have wanted to. And so I don't think you get an accurate assessment of how well everyone is doing. And so, yeah, you have this perpetual growth, but it's completely misaimed. And I think it tends towards just a, whatever the powerful are interested for their own ends, rather than sort of society as a whole.
Right. And I guess with this we can segue into the question of the other cryptocurrencies and some of the ways in which they differ from Bitcoin. It's my understanding that some of them wouldn't come to an end like in Bitcoin. So can you give me an example of those, and what does that mean? Because it seems very fundamental difference between two cryptocurrencies.
Surprisingly, I don't think that it's as big of a difference, depending on how the scheme is set up. So Dogecoin, everyone's favorite meme coin, I guess, at least Elon Musk's favorite, that has perpetual issuance. So that has a new amount every year, another million Doge will be produced. I don't know what the number is. This actually still, when you graph that out on a long enough chart, it still comes to this sort of asymptotic target. So it still has kind of like, a million divided by a trillion is one number, but it's then when it gets up to a 10 trillion, it's like you're not actually producing as much. So the stock to flow still tends downwards, just not towards zero. It'd be more like a gold where it's like 2%. My concerns there in the long term relative to Bitcoin are twofold. One, because Bitcoin is 0% issuance and Doge or whatever, let's call it 2%. If that's the case, then it only takes about 30 something years. I think it's like 30, might be 36, but it might be as low as 34 or 32 years, where if you had 2% growth, the value of each individual unit is halved. So, 2% does add up over time. So for people who are trying to think not just for themselves, but say like, I want to save up money to pass down to my grandkids. You wouldn't want to put that money in if you have the option of Bitcoin, which you do, with 0% long term. You would want that rather than 2% long term, because one of them, by the time it gets to your grandkids, it's going to be, less than half of its purchasing power. Whereas the Bitcoins get to them, it'll actually probably be worth much, much more. And so that has that effect. The other big one is when you've zero is it's a very strong Schelling point. It's hard to argue with. It's just like, it's very binary. Either it's zero or it's not. As soon as you make it 2%, well, then you open up the Pandora's box of like, well, should it actually be 1.7% or maybe 2.7%? Maybe it should actually be 5%. But maybe some years, maybe it should be 1%. And so now you've kind of recreated a political fight over what it ought to be, rather than a more socially scalable Schelling point. And I think one of the benefits of Bitcoin is that it removes these political variables. So there's not really as much to fight about. It's like you're either in or you're out. Even today, like everyone sits around waiting for the Fed to tell us like, oh, what percent of inflation are they trying to target, and what interest rate are they doing? And Bitcoin just removes all of that, so we don't have to worry about it anymore. But it's also it's a highly political variable, and if that number increases, going back to the Cantillon effect, well, if you as a miner, for instance, if you're a producer of new money, you're going to want that number to be higher, because that comes at the benefit of you at the expense of everyone else. And so you kind of are introducing these ethical issues back into the system when Bitcoin removes them. I think that has potential. I won't say for sure, but it has potential ethical ramifications. But more importantly, in order to have a decentralized currency, you need to have strong consensus, and the more political variables you have, the harder it is going to be. There's more attack surface to impede that network consensus. So I think Bitcoin is better long-term economically, and also, in terms of the ability to maintain that consensus.
Okay, that's interesting. And how do you see Bitcoin with regards to being sort of the base layer, the conceptual foundation for much more architecture to grow on top of that? So I'm thinking of things like smart contracts or decentralized financial institutions that are now being propagated. How do you see those? Are those the natural outgrowth? Are they parasitic? Are they missing the point? Can you help situate me in with those
Well,
things?
I think the kind of so-called decentralized finance, like Bitcoin is decentralized finance. Everyone's running their own nodes and holding their own keys. I don't particularly care for any of the sort of decentralized finance that are built on what I would call, houses of sand, something like Ethereum. I'm personally not a fan of Ethereum. But we're also seeing a lot of decentralized loans and lending being built out on Bitcoin, stuff like discrete log contracts, and other kind of interesting primitives that can be used for financial wider financial tools. And I think all of that, yeah, it's a natural outgrowth, because Bitcoin is money, and people need money for increasingly complex needs. So I think it's great. I don't care about sort of the Ethereum DeFi. I care about the fact that Bitcoin is an open permissionless system. So you can create tools that allow people to do that. You also have more capability for competition between Bitcoin firms. So, I think that it's, less likely that we would have monopolized Bitcoin firms that deal with these financial tools on a more centralized level. I wouldn't expect like a monopoly as much as with the current system. And so, in a way, lack of monopoly is kind of more decentralized. Anyone
Right.
can start a bank. I am a bank. I have
Yeah.
a node and I have keys. So
Right. Okay. I see what you mean. So would you say, so does it even make sense to ask the question of, is it good for Bitcoin to have competing cryptocurrencies? Can it make Bitcoin better, or is
yeah.
Bitcoin as good as it's going to get, basically? And that's kind of the point.
So it's kind of I take a Bitcoin Zen approach where it's just like people are going like I have a tweet somewhere that's like if people can print money, they will print money. And so it's like I'm not going to be able to stop people from spinning up their own cryptocurrency. In fact, I wouldn't want it any other way. Whether or not it's a good idea to do that or to engage with people who have done that is a completely different question, and I would argue in the negative. But that freedom is why Bitcoin gets to exist in the first place, and it's the one that libertarians have been fighting for a long time. So, is it good or bad? It's like, well, I think it's like a huge drain on resources that people couldn't just learn about Bitcoin and get into Bitcoin. But at the same time, it does bring a certain kind of interest. All these people use Bitcoin typically as their as their unit of account. So a lot of cashing out of different altcoin trades end up in Bitcoin. So in a way, they are using Bitcoin as the base layer, even if they don't admit it. If they're engaging like that. As far as like learning from them, there haven't been too many cases of Bitcoin directly porting new ideas from other currencies. Part of that is because they're not necessarily offering anything that's new in the sense of things that it's not like Bitcoiners hadn't thought of it. It's just that there was a reason Bitcoin did not, take up X, Y, or Z. But there are some things like Bitcoin is gearing up to include what's called Schnorr signatures, which is a different signature algorithm, which would allow a lot of stuff that currencies like Monero uses ring signatures. That's the whole thing. I wouldn't expect. I can't even fully explain it, so I don't expect any listeners to. But the point is that's something that people have watched these other communities use. But even then, Schnorr signatures were patented right up until right before Bitcoin was released. So I think Satoshi used a more open signature scheme that had been more battle tested. So I don't even know that it was necessarily as much, learning from these other currencies. Although, a core developer might, correct me on that, and I'd welcome it. But typically speaking, it's not like Dogecoin has not made me rethink Bitcoin's properties, and pretty much no currency really has. There was something else I was going to say. I guess a lot of these currencies I do kind of teach us as a teaching from a negative. Just got to be a better phrase for that, but like we've seen a lot of coins come and go. There's been thousands of altcoins, and they've tried all kinds of stuff. And there's many times where you look at them and it's like, oh, that's why it was a good idea that Satoshi did X. Because there's a lot of things that seem strange in Bitcoin. Like, why is a block every 10 minutes? That seems so slow. The reason is because in order to have a decentralized consensus, you need everyone to get the block in time so they can process and validate it. And if you don't, then you could have what's called orphan blocks. An orphan block would be like, okay, I got a block and it seems good, but then someone else who hadn't been in on that sent a different block and it's also good. And then someone built a block on that one. And so what happens to that first block? It kind of gets lost. And that's a lot of wasted energy for the whole network. That energy that was spent on producing that block that turns out to not be used could have been used for a block that was used. So by having it 10 minutes rather than 1 minute, you lower the risk of orphan blocks. So those do not happen as often in Bitcoin as some of the currencies that choose a longer block time. So it's just like, that's like a simple example of a trade-off that Bitcoin kind of purposefully made. And so when you see a coin come out that, let's just say that they had like a second block, it was every second like a new block, and they have tons of orphan blocks, then you would look at that and be like, oh, that's why, and you appreciate Bitcoin for its conservatism more than you previously did.
Okay, that's interesting, and it makes me imagine Bitcoin more as like because what you said is really telling, that a lot of people using other cryptocurrencies cash out in Bitcoin, not even necessarily in dollars, for instance. So there's a sense where maybe you need Bitcoin to remain conservative, giving up some of the space for some more maybe volatile, maybe risky, maybe innovative sort of satellite currencies that get traded maybe in certain communities or for certain specific purposes. So I don't know, maybe their utility is more apparent in that sphere. And the way you're describing it is making me think of Bitcoin sort of as the ground reference, sort of where things get cashed out. So I don't know if that's maybe a useful way to think about it.
Yeah, and I mean the other currencies. So something that I think a lot of people have trouble understanding is that this concept that the universe prefers one money. So if you imagine you had to live in a world where Walmart accepted their own Walmart bucks, and 7-Eleven accepted 7-Eleven bucks, Amazon took Amazon bucks, et cetera, et cetera. It'd be a pain trying to go, purchase things in the world. In fact, you're really just getting back to a state of barter, because then you have to find, like I need to find the guy who has Amazon bucks so I can get my hands on some of those. So then I can go buy something on Amazon. So you're back in a state of barter. So money is the most liquid good. And the more liquid it is, the more places accept it. So the more readily you can buy and sell it, the more useful it is. And so one of the problems with basically spinning up your own currency in a situation where Bitcoin would be just fine, is that you're kind of forcing the world back into a state of barter. You're making trade more difficult rather than easier. On top of that, because of the nature of the blockchain and how consensus works, it's Bitcoin works for because there's this incentive structure with the miners and a liquid currency that people actually want to hold and everything. You need that to form strong consensus, but not all of these coins have the same consensus guarantees. They sometimes make claims that some of them just frankly don't make sense, but some of them, like, what am I trying to say is just that you want to just have the currency that works, and you're better off with a singular currency. It's a rational economic decision to want for an economy to tend towards a single currency, and fighting against that is counterproductive to people in that economy. The claims as to whether or not these currencies can be sort of competitors to Bitcoin on any level. So some of them think that they'll live side by side with Bitcoin, but by acting as a medium of exchange, you're necessarily competing with Bitcoin. Because if you have Bitcoins, you don't have dollars. If you don't have dollars, you don't have Bitcoins. If you don't have, every asset is competing with one another as that medium of exchange, as that most liquid medium of exchange. And so this is something like Ethereum will, when it suits them, they'll say, look at how great of an investment this is. It's actually doing better than Bitcoin on this time frame. but then on the other hand, if say it's not doing as well, they'll talk all about how it's has more utility. But we know that the utility of money comes from how liquid it is. So it's like, well, it's not as liquid as Bitcoin. It's not as useful as Bitcoin. So they kind of have this, Mott and Bailey thing where it's like it's only competing when it wants to be, but it's always competing, is what I'm saying. And so you have to take that into consideration. It's like ultimately with a coin like that, if you had a coin that was useful, you'd want it only for as long as you need it. It would be more like gift cards, how a gift card economy actually works, which is I keep a gift card until I go get the thing I want, but otherwise I just want dollars. And part of the reason that you can't convert gift cards into dollars is because everyone knows that you would just convert it into dollars to actually hold. You get a gift card because it's like, we want to tie you into having to spend this, but that's not in your benefit. It's just the person who gives you a gift card as a gift knows, oh, you probably want something from this store, so this will be a credit. But everyone knows that you'd be sort of better off with dollars because that's better for your long-term future. So the competition between these coins is just I don't know, like they can do as they please. I am not one to be calling for the regulation of the production of cryptocurrencies. Instead, what I argue is that the people who are choosing to invest their money, which is literally everyone on the planet, should consider the long-term economic value of each of these things. So when we think about the fundamentals, if you're trying to find savings, we have to think back to the fundamentals of money and like the stuff we were describing and say, which good is best showing these qualities in addition to actually being liquid. And the clear answer is Bitcoin. These other things have not proven themselves as good savings. And so you should not treat them as such. If people want to go have fun, I can't stop them. And maybe they'll make a buck or two, but it comes at great risk. And I'm not there to advise them. I don't want to advise them, and I have no advice to give except to kind of focus on your personal long-term goals. And I would argue the more you do that, the more you settle in on Bitcoin as your core focus.
So what's funny is that most podcasts I listen to who have on a guest to talk about Bitcoin or cryptocurrency will be very quick to say, oh, please don't immediately go invest all your money in Bitcoin. This is not safe, et cetera, et cetera. No more than whatever percent they might say, like 2 to 5 to 10, whatever, right? From what I'm hearing you say is you're not even getting the question right. Like you're saying you should be more so in Bitcoin or as much as you can. Or am I overinterpreting your general stance here? For the average American family, what would
I don't I can't speak for anyone because I don't know anyone's particular needs, and I'm no kind of financial planner. What I'm saying, what I tend to see the process actually is, rather than, this isn't me saying what things ought to be, it's just what I notice people do is they do like, okay, I've learned about this thing. I want to be a part of this to some degree. So they get onto Cash App or River or Coinbase or whatever, and they buy a little. And maybe they even do DCA. So they, every time I get a paycheck, I'm just going to put a little bit in this, the same way that I throw money into my retirement account. And what happens is they also get to experience number go up. And as number go up, obviously what was once 1% might now be 10%. And then those people will, think about Bitcoin. And it's like, well, I mean, why would I sell this? Because this is the scarcest resource in the universe. So like, why that doesn't make sense to sell it. Like, what am I going to cash out to dollars? I don't need as many dollars right now. So why would I get dollars? And over time, those people's, the portfolio percentage will just increase naturally because Bitcoin's going up. And there's sort of this feedback loop of becoming more of a Bitcoiner and because you just see the value, and it's literally, eating up your portfolio just by its own, natural growth. Michael Saylor talks about, once you're long Bitcoin, you kind of like, wake up every night sweating, worried that you're too short Bitcoin. So people, as they see number go up, it's like, I should probably have more. And I think that's a very natural progression. So as to like what people should literally put in, I can't answer that for them. If you have a ton of spare cash, like, you should probably really be considering it. Like, I don't know why you would want your cash to just, be completely devalued. But then for, average Americans, they're, they're experiencing a lot of problems. So, for them, they might have much more immediate needs than what they can put into Bitcoin. But, if they receive a stimulus check and they're actually in a position where they don't, that stimulus check is not needed for immediate usage, like, they're good on food and shelter and they're going to be fine. Maybe they have their 6 months of emergency planning. Even if they've gotten to that point, it's like, I would be, surprised why you wouldn't want to just throw that money into Bitcoin. But I do not want to give any particular advice. I just know that, people who look into this, I think, will tend more and more into Bitcoin as time goes on. Even if they only put 1%, they might soon find themselves at a much higher percentage.
Right. My question is not.
Sorry, just to finish off a point that just, not only is it going to go higher, but they're also going to second guess the sort of standard advice of rebalancing.
Right. Yeah.
In fact, rebalancing might mean putting more money into Bitcoin. People need to rebalance into Bitcoin.
Yeah. And one motivation for me asking this is that I'm very wary of what is coming, at least what I think is coming on the horizon with regards to the inflation and the dilution due to the furlough schemes, and essentially people not producing and getting paid or not getting paid, which is also terrible. After more than a year and nearly a half of lockdowns, this is gonna have an effect. And I'm morbidly curious to see how many people are gonna jump into cryptocurrencies and specifically Bitcoin. So that's kind of why I'm asking, because people are in such dire straits at the moment that of course we can't give advice out on an individual level, but generally speaking, I think it's interesting that it's come to the point where a normie, recently no coiner like myself can sort of grasp the import of asking yourself the question, like, do I want to have all my money in fiat currency, or do I want to look into an alternative system? And it's kind of getting to that point right now. I'm sort of sensing it around me more. Many more lay people are talking to me about it.
People should go listen to Michael Saylor's podcast that he did with the Investors podcast with Preston Pish. I think that's one of his best, just kind of explanations everything, and he just does a great job talking about inflation. And these problems are affecting, everyone in the economy. It doesn't matter if you're rich or poor. You're kind of facing the same things, just with a different amount of capital you have available to act on. So obviously, someone who's very wealthy is going to have more opportunities to kind of find a lifeboat. But they're facing the same issues because they're sitting on a bunch of cash, and it's all getting diluted away. I mean, even if you're sitting on stocks relative to Bitcoin, it's all diluting away in the sense that the price is going down. So anyway, he does a fantastic job of talking on that, and I highly recommend it. Michael Saylor, though, he was not thinking about Bitcoin until about like March or April last year. And now he's, this sort of tour de force spokesman for Bitcoin, who has, an obscene amount of Bitcoins. I believe MicroStrategy is up to almost 92,000 Bitcoins total, which I think we're all jealous of. So anyway, like it was because of what was happening. You know, they kind of saw, you know, the shift in, you know, now everything's remote, and it's like, okay, like we can cut all these costs, and now we're also sitting on all this cash. But if I just sit on the cash, it's just going to melt. He calls it, you know, a melting ice cube. And it's like, well, if I'm not just going to sit on it, well, where do I put it? And it's like, you know, I can kind of put it into gold, but you know, gold, you know, for all the talk from the gold bugs, like, you know, gold has not, it's not done terrible, I guess, but it's just kind of, it's as I think Pierre put it, it's like number goes sideways technology. So it's just like, it's not actually interesting in this current time. Whereas like Bitcoin, not only like it has so much upside potential on top of its like fundamental values. And you know, you can put it into stocks, but that there's all kinds of, anyway, I'm not a business guy, but you know, he was able to walk through all of the business, you know, decision making with that, and they all settled on Bitcoin. For all of the reasons of its scarcity and portability and durability and all of that, they settled on it. And it was that quickly. And I do think that 2020 was the greatest advertisement for Bitcoin that we shouldn't have had to receive. So you know, I'm not glad that, you know, any economic turmoil happened in 2020. But it really was a wake-up call to the point where now we're seeing businesses putting billions of dollars on their balance sheets. And while businesses are doing that, the average person can, you know, maybe they only have $1 to put on their balance sheet, but they can. And I think that sort of, you know, democratization, if we want to use that term, is a beautiful thing, where it's this problem that's affecting everyone from the poorest to the richest. And I would argue it harms the poorer people way worse because they don't have hard assets. You know, I think the statistic I saw was the lowest 40% or 45% of Americans have no investable assets. So they're just dealing in cash. So all of their cash is just getting, you know, melted away. So whereas like a rich person, you know, as Michael Saylor talks about in that podcast, it's like, you know, they go buy real estate in the Hamptons, or they buy, you know, whatever stock is going to be going up. They can afford it. The great thing about, you know, Bitcoin is it's a little more divisible than real estate in the Hamptons. And so you can buy $1's worth. So if you're Michael Saylor and you have a company that has $500 million that you can invest in something, you can go buy $500 million worth of Bitcoin. But if you're only an average Joe, it's like, you know, you're working as a plumber and you come home and you have like $100 at the end of the month that you can just put somewhere. It's like, well, you can buy $100 worth of Bitcoin. So it's this lifeboat that works equally well for everyone across the economy. And there's no like barriers to access because it's, you know, expensive, scarce, real estate. You can't, oh, I'm just going to invest in the window in that mansion. You can't do that. So it's a really beautiful thing. And I love that accessibility. So, you know, the average person, it's also kind of their best bet because, you know, even with a stock, you have to buy like, I guess some of the platforms, you know, can give you, you know, you can kind of buy shares of a share in a way. But even then you're like trusting this company to not screw you over. And I think everyone kind of, felt the burn with Robinhood. It's like, okay, like you can use this platform. They say that they're here to help you be able to invest. And yet it's like, well, I want to invest in GameStop. And they say, no, you can't. So Bitcoin is this thing. You can put your $1 into it, and then you can hold that, you know, dollar worth of Bitcoin yourself with your own keys, and no one can ever take that away from you. You know, no company can tell you like, oh yeah, sorry, like we're not letting you trade anymore. It's like, I'm putting that in my, you know, Swiss bank vault, my personal Swiss bank vault, and it's not coming out, and there's nothing you can do about it. And everyone at every strata of the economy, it doesn't matter your background, doesn't matter where you are in the world. It doesn't matter. If you can find Bitcoins, you can buy them and you can save them. So I hope that kind of answered the question. I know we got a little off track.
No, that's perfect, and it's so important. I mean, you forget. I think we're used to things not going totally sideways, but ask anyone who's had funds frozen, who's had their life savings vanish because of the inflation in their country, or civil war or anything crazy like that, and then you realize the value in having a something that you can really keep yourself and have be responsible for. So you're still responsible, and you could mess things up, but at least you're responsible, and you don't have to put
I think in America, there's always been this sort of complacency. It was like, oh, it's not going to happen here. It's not going to happen here. And there are a lot of things that I would be very surprised if they happened here. But at the same time, I think the COVID response, actually, I mean, even just the existence of a pandemic at all, the way that the kind of response, which for better or worse was unprecedented, and a massive undertaking, and the economic response, which that itself, people should look at what was happening with the Fed end of 2019. Like, there was a lot of economic problems brewing prior to COVID. And COVID, kind of blows the lid off things. And then we get all these stimulus. You kind of see, certain things like, oh, they can happen here. Like, we can have a society where, we get locked down, for better or worse, like everyone gets locked down. And we can't have a society where it's like you wake up one day and the Federal Reserve has, made interest rates such a way that the Treasury has now printed trillions more dollars. Just think of that idea, just like trillions of dollars. I mean, that the last stimulus was 2 Bitcoins, 2 entire Bitcoin networks were just created in terms of the value. That's something that can happen. And I think like a sort of silver lining is shocking people out of their complacency to realize like, hey, we can't get too comfortable with our current system. That's not to say that I think that Bitcoin will make a far stronger and more resilient, more robust, outright anti-fragile economic system as people adopt it. So I'm actually very hopeful for the future. But in order to build that future, you have to see that there's a problem with the current one and make your choice to move over. And you can do that now rather than having to wait until you go to the store and realize that they don't want your dollars and they just want your Bitcoins and you don't have any. But that shocking people out of complacency is sort of this, like I said, it's kind of a tragic silver lining, but I think it's good that people are now seeing that's like, hey, the system really is fragile. What's an alternative? And Bitcoin is this, that's the beauty of this whole thing, is this is all going on and it's perfectly aligned with Bitcoin's halving cycles, which have been, kind of known to be correlated with these price rises. So it's just like all works together in this perfect storm where it just becomes this wonderful advertisement of like, the world is totally chaotic. What's the alternative? And you just look over and Bitcoin's skyrocketing and it's like, oh, there it is. And I think that woke a lot of people up. And I think that's kind of only beginning. I think we're going to see a lot more in this cycle.
Interesting. So I have my before last question is sort of makes us jump around to a different topic, which would be the zero knowledge proofs, and correct me if I'm wrong, my understanding that it would help privatize transactions on a cryptocurrency network, essentially, and that is something that Zcash is pioneering. And I would like to have your opinion on what does it mean to when you make a transaction on the Bitcoin network and that transaction is publicly visible? How does that influence consumer behavior? Do you think what Zcash is doing in that respect is interesting, is progress? Does it have any downsides, and how should we think of it?
Yeah. So the interesting thing about Bitcoin is that it is not anonymous. It is pseudonymous. People have mistakenly said it was anonymous from the beginning, and I think that burned some people. I think they should have had a more realistic understanding of the system. As far as changing consumer behavior, I mean, I suppose there might not be as many people purchasing drugs with Bitcoin as perhaps there was back in the Silk Road days. But at the same time, the reason that most people are purchasing Bitcoin is not because they were wanting to go around and spend it on something. In fact, like often the people who buy Bitcoins, they explicitly do not want to spend it. And so I don't think that the privacy implications of these transactions being public, and mind you, for people who are listening and might not understand, on the blockchain, you can see that money was spent from this UTXO, this unspent transaction output that was associated with this address has been spent, and this amount has gone to this new address, and this amount has gone to this new address, etc. But there's no personal information. It's all just like addresses and values. That being said, given certain knowledge, you can correlate data on there with certain heuristics and try to get an understanding of who's who and what are they doing. And that this has been used for various investigations. But first and foremost, people are buying Bitcoins because they want to have savings. And so I don't think it has affected that as much. And I think certain types of privacy schemes that people would want to implement on a blockchain hamper this goal because of the fact that they can sometimes make it more difficult to have the assurances that the monetary policy is being validated and is credible. So now Bitcoin has had bugs before, but for instance, Zcash had an inflation bug. And my understanding is it was rather hard to detect. And we also don't know if there's more out there. Whereas with Bitcoin, I know how many Bitcoins are on the network because my node is running the numbers every 10 minutes. And so I know with very, very high certainty that the network has what I want. So when I'm thinking of where to put my savings in, it's the network where I can have that kind of high assurance. That being said, like the very idea of zero knowledge proofs, that's very cool. And I hope more gets developed on it. But I think there's a reason that the marketplace has continued to choose Bitcoin despite seemingly less privacy. So what I mean by that is like there's still mechanisms by which privacy can be maintained on Bitcoin. It takes more work. And there's also ways in which Bitcoin is still improving privacy. So, people are working on Taproot activation at the moment, which basically there's new signature and transaction schemes that would make it such that a transaction has less information on the blockchain that reveals what's going on. So the less information you have on the blockchain that describes what's going on, that is more privacy. So, it's not as though Bitcoin doesn't care about privacy, and it's not as though Bitcoin is not actively improving privacy or trying to improve privacy. But the key thing is, the monetary policy matters kind of more, I think, in the macro picture of a monetary adoption. And finally, you can also find privacy in layer 2 schemes, whether that's something like Lightning Network, which offers better privacy than the base layer, or if it's in the case of a more centralized solution, like, maybe in the future there's like a Chalmian Bank where you have anonymous digital cash, kind of like the old DigiCash from the 90s, but with Bitcoin as the base layer. So, I think as privacy is needed, people will seek out solutions. But first and foremost, we can't make a sound monetary economy without a sound money. And so, first and foremost, we need to make sure that we know that there's no inflation going on, and it's harder to do that on a coin like Zcash than it is on a coin like Bitcoin.
It's really interesting because what keeps coming up for me after you give those very insightful answers is how a lot of the decisions that come into it aren't always technical, but they're very much value based, meaning that a lot of the decisions that go into it aren't simply engineering decisions, but really decisions based on what we want to value in the monetary, economic, human interactions that we have. And it seems that Bitcoin is very resistant to change. And it sort of has this nearly like, I don't know, do you know of Chesterton's fence? Basically. So
Yep.
it has this vibe where it's like, don't fix it if it ain't broke. And if you don't know why it works the way it does, don't assume that you can just change it. And that's
Right.
very interesting to me.
Yeah, and I mean, but even beyond that, I mean, you could someone from like the Zcash community might know exactly why those decisions were made, but still want to take the fence down. And Chesterton's point was even that if you actually do understand the fence, then you can go take it down. So for some arguments, I think that's a good response, but not necessarily always. I think the difference here is I think the Zcash community, like many communities, I think that are focused on privacy, tend to be more focused on the sort of transactional payments. So like actually, sending money around, where Bitcoin has a different set of needs that it's optimizing for, which is namely like this decentralized nature of it, the backwards compatibility, the auditability, and those sorts of things, which sort of necessitate not jumping into. I mean, someone could make a fork of Bitcoin tomorrow that has a bunch of like zero knowledge proofs of some kind. But we have to ask the question, if that weren't adopted, we'd have to ask why. And I think it would be a mistake to assume that it's merely because Bitcoiners don't care about privacy and freedom and something like that. Not that Zcash people are necessarily arguing that, but the point being that, like you should understand, what are the trade-offs that community is trying to make. And I think that, the Bitcoin trade-offs are the most important ones. I mean, what has on a personal level, what's harmed me more, like I don't like the fact that credit card companies have all this information, and that gets sold to advertisers, and all this. There's just a whole web of really just like nasty financial panopticon stuff, no doubt, and it's creepy and it needs to end. And Bitcoin and Lightning and stuff like that actually do a lot to prevent that within the context of a Bitcoin and Lightning world. However, personally, what bothers me more about the system we have is the fact that I can't just put money in the bank to save for the future. That is just a much more fundamental long-term issue that needs to be addressed. And, that's just how I feel. So I would love to see more privacy, and I do hope that I do hope that zero knowledge proofs get implemented. However, I don't suspect things like that will be implemented on the Bitcoin base layer, primarily because of the difficulty then of preventing inflation bugs, making sure that they're not happening and making sure they don't happen. So an example of this like this trade-off in real terms is there's a project called Elements, which is what's called a side chain of Bitcoin. So it's like it's its own kind of blockchain thing, but it operates with different consensus rules. And it has what's called confidential transactions. And confidential transactions is a really neat way of making it so that you can't see how much money is being sent from person to person. You see that there's a transaction and there's some crypto magic that lets you know that the transaction is valid, but you don't know how much is being sent. It's very cool. It's live on what's called the Liquid network. And that's great. I'm so glad that technology, maybe that technology will be useful for all kinds of things like Liquid itself. Maybe people will use that. However, there's a reason that, confidential transactions were created by, Greg Maxwell, a very prominent Bitcoin core developer. He's the kind of person, if he wanted it to be in Bitcoin, he would want it to be in Bitcoin. Like there's a reason that it's not in Bitcoin. Elements is basically a sort of fork of Bitcoin with a different consensus, rules. And it has confidential transactions built in, meaning confidential transactions is a technology. It's not something that's just talked about. It's something that exists and could be in Bitcoin tomorrow. So we have to ask, well, why is it not in Bitcoin? And it's because if confidential transactions were in Bitcoin, one, it would scale way worse. Like you wouldn't be able to have as many transactions in Bitcoin because the extra sort of data needed to do all of the checking is much higher. So there's a lot of overhead, as opposed to Bitcoin transactions as they stand have actually tended over time to get smaller. So that's one thing, is the scaling issue. The other, once again, is if you don't know all of the values, you're relying on the assumptions built into the zero knowledge proof or whatever other cryptographic proof to know that there's not an inflation bug, as opposed to in Bitcoin, because the privacy model is just that your name isn't attached to anything, and you can have as many keys as you want. You can have as many addresses as you want, and all of this stuff is pseudonymous, which actually offers quite a lot of interesting privacy. Because that's the case, everything is just, all of the numbers part of it is out in the open, and you can just go down it like a standard accounting book, count up the numbers in the ledger, add it up. Okay, it's 21 million. We're good. And so there's none of these. You don't have to have the same kind of assurances in novel mathematical techniques. So, Zcash uses very, very fascinating zero knowledge proofs, but those are also there's a lot more assumptions going on to make sure things are going as expected. And I'm not well versed enough in them to even personally be willing to, have a lot of money that I'm trying to save for my grandkids resting on mathematical constructs I don't even understand. Whereas with Bitcoin, it's like it's much more accessible, it's much more open, and you don't have those same assurances. It's more of an arithmetic problem than a alien mathematics problem.
Yeah. So my last question for you, Michael, is actually with regards to how I don't know if it's the Bitcoin network, Bitcoin, but maybe just cryptography more generally. Can it help us protect data from medical trials and make sure that it's not tampered with, that it's easily accessible, that changes are followed, that it facilitates peer review? Does any of that technology and do Bitcoins help that issue we have in some way? Do I have any false hope here, or?
Well, so there's a lot of people who would be willing to sell you a medical data on the blockchain, snake oil or whatever. I don't know that Bitcoin is necessarily necessary for this, but I do think that cryptography could help with this problem. So when you say the problem is worrying about tampering, so there's a couple of things. You need data integrity. So you want to make sure the data is actually what you thought it was. And you also want, you know, a timestamp of, you know, it was at this time that data had a certain state. And there are, you know, cryptography is used for data integrity. So you can have, you know, hash functions. When you make a hash of something, it spits out basically a sort of random number that only a certain set of data would be able to produce. So if you changed one bit on the input, the hash on the other side is going to be completely different. So that kind of gives you some, you know, integrity, but you also have to know is like, you know, when was it produced by who? And so you can also sign things. So if you have a, you know, a cryptographic key that is known, the public key is known, and you use the private key to then sign that hash, well, then people can receive that data. They can run it through the hash function, see they get the same hash, and they can also check the signature to see, yes, this is actually coming from Rafi. Rafi has signed off on this, not just, you know, it's not just data that's out there. The timestamping, Bitcoin can kind of play a role in this, but not. It's not like we stuff all data into the blockchain. Instead, there's a I don't know how much it's used these days, but there's a thing called open timestamps, and open timestamps lets you take large bodies of data and create what's called a Merkle tree. So this is it's actually a data structure that's used for the transactions in Bitcoin, but basically it's also used in torrents, you know, in BitTorrent. And it's a way of seeing that a particular piece of data is part of a larger set without having to know the full contents of the larger set. So you can look into how that works, but open timestamps uses this. And so let's imagine like you have 1,000 people putting their medical data into a Merkle tree. So like everyone hashes their stuff. So the hash of Rafi's medical data is right here, then it's my medical data, and then everyone else's. And all of these are hashed up in this tree. And at the top, you have this root. That's the Merkle root. You could timestamp that into the Bitcoin blockchain. So you have thousands of people, but you only had to pay for one small transaction to actually give it that timestamp. And then you know, because of the assurances of the Bitcoin network, that at a given time, this was signed off on. So that gives you some stuff. So I don't know if there's anyone working on a non-scam kind of thing around this, but the reason I say all of this is, yes, there are ways that we can use cryptography to better manage this data, whether it's a blockchain thing, which I'm quite skeptical of, or if it's just we make better uses of, you know, the databases we already have, but with, you know, cryptography baked in. So like, you know, a lot of this data, you know, I'm guessing that in medicine, there's also still a lot of just like PDFs floating around as opposed to like actual good data, kind of like how it still is in finance. It's like you're running a financial system on like these bad PDFs and Excel spreadsheets. And, you know, we can design databases that, you know, instead have, you know, signatures and hashes and stuff like that baked in so that you're making use of these tools. So I don't know how development on that kind of stuff is going on, and I can't give you any kind of time frame. But yes, I do think that, you know, we have better information technology, so to speak, today that could make better personalized medical records that are less, you know, beholden to and more private. So less in control of, you know, big organizations, and you know, you're not having, you only reveal things to the people you actually want to reveal it to. So you know, I have hope in the long run. I'd put that on my, like, you know, long term. You know, in a Bitcoin world, Bitcoiners don't want to put up with the current insurance system. So I'm sure they're going to come up with better ways of managing that with the technology we have available.
Yeah, let's keep our fingers crossed because like you were saying at the start of the podcast, our health is, our health and our time is what we have that's most precious. So if we can keep a hand on that, if we can have the keys to our own health data as well as the keys to our own funds, that would be progress, I think. So I hope that
Yes.
happens.
Yes. And then,
Yeah.
drone delivery of ribeyes and stuff like that would also be nice.
Yeah, yes, I would like that very much, and I think my cat would as well. So, if cats are happy with it, it's probably going to happen. The internet's probably going to make it happen. So I'm not too worried.
That's a safe bet.
Yeah, definitely. Well, man, this has been a masterclass in everything Bitcoin and economics and cryptography. So this was a real treat for me, and I'm sure a lot of people are going to enjoy this. And I just recommend people to check out your podcast with Michaela Peterson, which is a great intro to Bitcoin for noobs. And maybe this one is a bit more esoteric and wide ranging, although I have to say you dropped some very practical bombs for me. So I'm gonna have to re-listen to that one and try to share some clips around as well.
Yeah, happy to help. Always happy to share my ideas.
Yeah, man, it was a pleasure. So, anyways, I'll hopefully set up a round two with you down the road. There's some more specific, maybe when I've read a bit more into this, and I can ask you some more probing, pertinent questions. I still have my no coiner status to shed fully, so you have to give me a little time here. But yeah,
it's a learning process.
Yeah, and I'm not a very mathy guy. I'm a sciencey guy, but I'm not a very mathy guy. So I'm trying to wrap my head around all the cryptography. But for me it's kind of like how I approach nutrition. Like you give a lot of the history alongside it, and that helps understand why things are the way they are today, and that they don't come out of nowhere. So it's personally very useful for me the way you approach it. But yeah, I should probably reread some of the white papers and stuff.
Well, I highly recommend people read the Bitcoin Standard by Saifedean Ammous, fellow carnivore.
Mm-hmm.
It's a great book to go through the economic side of things. And then, there are a handful of good technical books that aren't super difficult for, laymen to be able to get a grasp on these things. One of them would be Grokking Bitcoin by Rosenbaum.
Mm-hmm.
I think that's Manning Publications. That's a good one to read.
Okay, nice. I'll definitely put that in the show notes. And we mentioned, so Michael Saylor's podcast, right?
Yes,
as well. Yeah.
Okay. And while you're at it, Michael Saylor's interview of Ross Stevens was a very succinct, just tour de force in why Bitcoin matters.
Okay, perfect.
And what it's going to do. Yeah.
I'll definitely have all that in the show notes. Well, thanks again, Michael, and I'll see you on Twitter, and hopefully we'll share in some vegetarian bashing and some good memes.
Awesome. Thank you again for having me.
All right, my pleasure, man. Bye.